Welcome to the stock market recap for Wednesday, June 4th. Before we get started, we're still going to do the same kind of flow between the indexes, ETFs, and leaders, but now I've broken up the kind of recap names versus long setups and short setups, just so it's a little bit easier to go through kind of what I'm seeing in the market, along with like my top ideas on the long and short side. So, let's take a look at NASDAQ first, QQQ. Overall, really strong action today and the past week. Higher highs, higher lows, tight close above the 5-day EMA. A little bit less volume than yesterday. And overall, today was just a rest day in the market. We have a couple of key earnings tomorrow, so it makes sense that we're resting today after kind of two expansion bars right above previous rally highs. So not doing anything wrong there. SPY also closed flat and near the low of the day, but still aired to the 5-day EMA, lower volume on today's, um, just slightly weaker close overall, but again, not doing anything wrong. IWO, another flat close, but had higher highs, higher lows, aired to the 5-day EMA. I think we're probably going to test this 200-day moving average before we get any more distribution, but really like the move off the low, the move off the 20-day EMA, not once, but twice, and now we're at the rally point highs. ARKK, I was pretty impressed with how this is acting, especially given Tesla's weakness, but excuse me, inside day today, low a day bounced just above the 10-day EMA at that 5-day EMA, and we did close plus 0.1%, so basically flat. Overall, just nice consolidation here while the 20-day EMA is catching up. If Tesla can find its footing, which we'll cover in a little bit, I would think that a break over today's high is a potential add spot or buy spot versus that 10-day EMA. And then Bitcoin, BTC, overall not doing anything wrong. Another slight pullback to the 20-day EMA. I said before, if the market is going to continue further, we would expect Bitcoin and crypto to kind of come into support, which is this previous breakout area, come into support, kind of chop around there, and then push out. Thought we were getting that with yesterday's action, but today we had another pullback on lighter volume. So overall, nothing bad to report there. Some ETFs to go over. KWEB, this is the China Internet ETF, was the strongest today. Good volume, back through all the key moving averages. There's some names in that group that are catching my attention, but I still think there's just too much political risk to really take those when we have plenty of stocks within the US that are holding up well. ITB, the home builder ETF, I was really impressed with today's action and the action yesterday after on Monday we had a quick undercut and reclaim of the support gap from the low, what was that, the 21st to the 22nd. So we looked like we were breaking down, undercut that support gap, closed above that entire zone, and then followed through yesterday, followed through again today with a gap up, strong close right at that 50-day moving average, up 2%. XME Precious Metals ETF. This made a new high for 2025 with a nice gap up. Semiconductors, SMH, higher highs, higher lows, kind of breaking out of this consolidation. AVGO's earnings are tomorrow, so that we'll see if we really get going here or need some more time. FDN, this is the internet index, heavily weighted with Meta, and with Meta acting well, we've broken out of this consolidation and look to start trending higher. ITA, the aerospace and defense ETF, one of the leading stocks or one of the leading groups in the market, just continues to ride that 5-day EMA higher and higher, another gap up, slightly weaker close, but until we have a snap under the previous day's low, this is really setting up like a frozen rope, which when they do break, they tend to correct very quickly. But if you're in them, it's nice to trend higher. BLOK, great relative strength compared to Bitcoin with higher highs, higher lows today, bounced off the 5-day EMA and closed well. Just a couple of weaker groups that I wanted to cover, XLE and XOP, energy ETF, and oil and gas exploration. Overall, just very weak under the 200-day moving average, has a couple of resistance gaps from the rally point high and right into the 20-day EMA. and XLE is actually below all the key moving averages here. So not a group that I really want to be focusing on, even though yesterday we had some potential setups with CRK. What was the other one? EQT, which overall are still acting well. I just think this is a rough group to be trading in. Next, we'll go over our leaders. So let's just do it in order. CrowdStrike today, gap down on earnings, undercut the 20-day EMA, undercut the support gap, but closed above both of those. So not the greatest closing range, basically 50%. We closed under the 10-day EMA. We tested the 5-day intraday, but wasn't able to hold that. So overall, not a I would call it a mixed day because the market was strong, and because this is a leading stock in one of the leading themes. It was kind of just mixed, down 5.8%. What I want to see happen is this low from today hold on any pullback or any chop here. If we can hold above the support gap, that's even better. But we have kind of three areas to manage our risk against, which is the support gap low, the 20-day EMA, and the low from today. As long as we stay above those three, I think we'll probably kind of bounce around here and then move higher. I'm going to jump to Palantir because Palantir had a similar issue on earnings, had that double bottom base, but then gapped down to the 20-day EMA. Didn't undercut it as viciously as CrowdStrike did, but touched off it, kind of consolidated for a day, and then got going. And Palantir today, a little bit of weakness, but good closing range overall. Going back to that CrowdStrike chart, so if we get a kind of inside day right at the 20-day EMA and then start pushing through that area, I think that's perfectly healthy. CRWV, we're going to do a little bit more in depth as a potential parabolic short setup, but today another 8.6% higher, pretty massive volume above the 5-day EMA, getting a little bit extended here. Carvana, great stock, pulled back into that 10-day and then has since just holding that 5-day EMA. Also starting to look a little frozen rope-ish. If we can get a gap up and really start accelerating the upside to take out the previous highs, which was a couple of years ago, but at around 377, that could be a potential spot to take some profits at. GEV, very quiet day today, low volume inside candle above the 5-day EMA. That's exactly what you want to see out of a leader that's just consolidating. Even if it pulls back into the kind of 10-day EMA or the support gap, that's actually a spot that I would be looking to add or start a new position at right around 464. Hood gapped up and was trading pretty high in pre-market. Eventually, just a solid hammer candle day above the 5-day EMA, not doing anything wrong. We'll be watching for a pullback into the gap zone, into that 10-day EMA as a potential entry or add spot. Netflix, new highs today with a gap up, opening on the low, closing right near the high. Just a monster stock and not doing anything wrong. Palantir, we covered that shakeout. Roblox, another stock that's starting to look a little frozen ropish, just riding that 5-day EMA higher. But until we break a previous day's low, I would just try to stick with it. Another name that if we do get a pullback in the market, any corrective action, ideally to the 20-day EMA, would be a really nice spot to manage risk against. And finally, we have ZS. I thought this would be gapping down with CrowdStrike, but this held high, made new highs, closed a little bit weaker, kind of that same CrowdStrike sell off towards the end of the day, but still air to the 5-day EMA, great reaction after earnings and on day two. So our leaders are still acting like leaders. I don't see any room for or any reason for concern there. Now we're going to jump to just the stocks that I have on the recap. Not quite long setups or short setups, but just some key stock action that I wanted to cover. We'll start with Tesla, down 3.5% today. We also closed below three support gaps, which is a little concerning, but we closed right at the 20-day EMA. This weakness, I don't know quite how to explain it. Maybe the Elon kind of fighting with Republicans. I don't put too much stock into that. What I'm looking for here is if we gap down below this area, if we can take out, like rally back through the 20-day EMA, that's a potential entry point versus the low of the day. I don't want to see like an ugly close below the 20-day. That would be my main concern with Tesla. Into better news, Spotify gap up, open on the low, pushed into new all-time highs again, up 4.5%. This has been a monster stock. Not a very fast-moving stock, but one that does tend to trend very well. DoorDash also went into new highs today. Nice kind of inverse head and shoulders pattern, rallied up, put in a couple days of consolidation, tested that 10-day twice, and now we're at new highs, 52-week highs at least. Meta, great action after yesterday's kind of pause day on low volume. I'm seeing this more and more often when we're in a strong market, indexes above the 20-day EMA. When you get a really large expansion bar like this on volume, followed by a consolidation bar or a red candle close above the 5-day EMA on less volume than the previous day, and ideally very, very little volume. The next day, if you gap up, an opening range break is not a bad entry point versus the low of the previous day. I've seen that in a lot of the speculative names that I've been tracking, but have seen it in some liquid names as well now. So just wanted to put that on your radar. WPM, this is the gold or precious metal stock that we've been tracking. Tightened up at the 5-day EMA, had the expansion gap on Monday, and then new highs today. So acting great. MGTS, this came into the HVC area, the high volume close. This was one of the stocks that actually got that red candle close on my radar because we had this massive day up 164% on massive volume. We had a red candle close down 12%, but on much lighter volume than the previous day. Followed it by a gap up and opening range break. That stock was up 47% the next day. From there, we pulled back into the HVC and then never closed below it. That's a good sign. And now we've had 3 bars to the top. Not quite, no entry up here. We wanted to build exposure right at $5, right at that HVC level. AVGO, third gap up in a row, new high, another set of new highs. Earnings tomorrow after the close. So we'll see how we respond to earnings, whether we gap up and go, gap up, chop down, or have a gap down and start looking at some of these unfilled gaps at the 10-day EMA or the 20-day EMA as a potential kind of shakeout entry point. NVIDIA, great action today, higher highs, higher lows, held that 5-day EMA on the pullback and actually closed into this resistance gap from the DeepSeek gap down. When was that? In January. So great action here. APLD, another stock that had that red candle close after an expansion bar. This red candle close was actually positive, plus 1%, but less volume than the previous day. Today, opening range break up 29%. Great closing price or closing action. Just a monster move from $3 to 13. This is one where if we kind of flag out for a couple days, a potential like intraday setup could get you into this. And RBRK, I feel like I've been saying this multiple times, but there are a lot of growth stocks in this frozen rope kind of setup. This has earnings tomorrow after the close, but has been riding that 5-day EMA extremely well. If we do break that frozen rope kind of trend, then we can get some high volatility, but we'll see what earnings bring. Now we'll jump to the 10 stocks that I'm kind of watching on the long side going into tomorrow. No specific order on this, but Duolingo, this is one that we've been tracking for a while. Great action on earnings. What was that up? Up 21.6%. From there, had a little post earnings drift higher, started to consolidate, had a good shakeout to the 20-day EMA on May 30th, and then just 3 more tight days. So with this, I'm either looking for a gap up that takes out yesterday's high as an entry point, just this pivot. You can see multiple days highs right at that area, 532, or on any market weakness, if we come in and test like the previous low of the pullback, the 20-day EMA, this gap zone or HVC area, would manage the risk against kind of day two or three's low. QBTS, this has been the leader in quantum with the quantum stocks. Really nice, kind of not quite a double bottom base because you would want the second pullback to be below the first. But either way you put it, kind of a VCP setup, tighter, a little bit tighter, really tight in the handle. Then got going, highest volume in over a year on May 20th. Got back over that area, the HVC, on Monday, and then two basically tight trading days. I'll be looking for a retest of HVC of the 10-day EMA as a potential entry at 1660-ish versus the pullback lows versus the 20-day EMA. SEZL, this has been on our watch list for a while. New highs, just a great acting stock. This one, I'll be waiting for a pullback into the support gap below the 10-day EMA as a potential entry point. Toast, we've talked about this a lot too. Actual quality double bottom base, pulling into the 20-day EMA, touched off that support gap for a second time here. That could have been an entry point, just a shake under yesterday's low and then a recapture of that area. Wouldn't be surprised if this just starts to rally tomorrow, but if we do get another shakeout into that support gap HVC level, you can manage your risk against $40. Dutch Bros is next. Was a little hesitant putting this on the list because it has this resistance gap from the rally high. Pulled it into the 20-day EMA, so that support gap. Had a good response to that. Good shakeout and close on Monday, and then two tight trading days today. This I'm going to be buying on weakness. If we come into that 20-day as a higher low pullback, you have that gap zone as well, right around $68. I don't want to take this on strength just because the market's slightly extended. We have this resistance gap. Um, just personal preference. I would rather take this on a shake of that 20-day. Snowflake, this is another one that we've been monitoring for a while. A lot of volatility today, still closed positive, but you can see the daily bar kind of expanded in its range here. So because of that, just looking for that 10-day EMA support gap undercut as a potential buy point, and then just manage risk against the day two after earnings low at 197. TEM, we went through the comparison with APP's second stage base yesterday, so I'm not going to repeat that, but overall, really good action in the past 2 days, tightening up, allowing the 5, 10, and 20-day EMAs to curl up under the low of that area. Just looking for a breakthrough today's high as an entry and stop at yesterday's low. SMR, we've seen some weak action out of the nuclear or kind of what is it? Yeah, nuclear theme. This acting a little bit better than NNE and Oklo. Touched off the HVC area and the 10-day EMA today. Still a lot of volatility. Would want to see a couple tight bars coming into that 10-day EMA and HVC and pull back low area, and then manage the risk against $30 there. PRCH, this had a failed breakout, so not super excited with this name. This should actually be a resistance gap. But we've come into the 20-day EMA. I'm looking for kind of a higher low pullback day, just like 1 or 2 days to tighten up, and then a breakthrough today's high at 983 is a potential entry point. Last long setup is going to be ASTS. This reminds me a lot of SMCI, and I really want to kind of hammer home this setup because I think it has some good potential here. The stock has gone from $2 up to $40. And instead of completely rolling over, it's gone sideways for multiple months here from August of last year to June. So 10 months now, we've come into the 200-day moving average, had a bounce, undercut it. So really shook out anyone that's just using the 200-day as their stop. Had a higher low shakeout under that area. And then I actually took this off my like larger list of names after this day and had to add it back because it had these 3 bars, strong reaction on Monday through the 5, the 10, the 15, 5, 10, 20, and 50-day moving averages yesterday. And then today we gap up and rallied through the 200-day moving average on massive volume, great closing range. If we get just a day or two tightening up here, going through today's high at 2909 is a potential entry point. And want to take a second to review SMCI's chart. SMCI, the base in 2024, happened after a massive rally from $4 up to $33, then went through multiple month base. This was much more of an ordinary basing than ASTS, so that's one strike against the setup, but still reminded me of the same kind of quality chopped to the sideways. We never undercut the 200-day moving average. We did undercut the 50, then put in a higher low, and then had those initial expansion bars. So with ASTS, if we get a couple tight days and then break to the upside, that's an entry. But if we get a couple tight days and then pull back into the key moving averages, that is an area that I'm going to be really, really interested in because that was the last spot, kind of last shakeout before SMCI went on a massive, massive run. So going back to ASTS's chart, if we do kind of pull back here and let the 5 and the 10-day EMA catch up, that is going to be a spot where I'm going to be really interested in this name. All right. We're in a bull market. Index is trading above the 10, the 20-day EMA. Leaders are acting great. I still have these short setups to cover just because I always want to be balanced between long and short, not so much with positioning, but with preparation. So if these short setups break to the upside, we just have more evidence that this is a strong market. Don't want to be taking any shorts, want to be putting in more and more exposure to the long side. But if these setups start breaking to the downside and we actually see follow through to the downside, then we could start taking some of these shorts and kind of balance out our portfolio. First one I want to cover was HIMS. This had a news failure yesterday, was up at one point like 17% into these resistance gaps from the all-time high area. Big move down, ended up the day down 3.5% after being up 18% or 17%. Today was up 8% at one point, uppercutting this resistance gap and then failing. That was a short that you could have taken as we came back into that resistance gap high. Let me go to a 5-minute chart to kind of go over that. But right away, we have big expansion bar. We rally up through, and then we did get a lot of volatility at the resistance gap high. But either way, your stop would have been the high of the day if you were shorting when we re-entered that zone. And that's still only like 2.5% risk there. So if you didn't take that tomorrow or the next couple of days, if the market continues to rally and this gets back into that resistance gap area, but puts in a lower high, then breaking through that area is my entry on the short side. And then I'd be using today's high as my stop. MMYT, this make my trip has been in a stage three for a very long time. Uh, had this malfunction bar, excuse me, on the eighth here, rallied up to that resistance gap, failed again, and since then has put in two more resistance gaps to the downside. We do keep wicking at the support gap. So right now, even with the market as strong as it is, this isn't breaking to the downside, excuse me. But I don't love the recent test to the 20 to 200-day moving average, followed by a gap down, and then kind of a red candle close today. So with this, if the market rallies and we get a mini rally to the 200-day moving average at 103, that's a potential short versus this recent malfunction bar on the 27th, the high there. Or if we take out today's low, that's a short entry versus the high of this resistance gap and the 200-day moving average. Geo, another stock that actually made a big move and is now just basing out, but it kind of has this L formation or H formation, whatever you want to call it, trading under the 50-day moving average, relative weakness, kind of really piling up here. And another name that's been wicking at a support gap, but if we get a close below that, it looks very likely that this will test the 200-day moving average and this unfilled gap up. WGS, this gap down on earnings and basically has been wedging up with all the moving averages stacking on top of each other, looking for a gap down or a break under today's low and the 200-day moving average as the trigger there versus the high of the rally. Upstart UPST rallied to the 200-day moving average. This is a potential lower high, and we have a resistance gap zone here that we uppercut and failed at today. With this, I'm looking for a strong move in the morning with the market, a rally through that resistance gap, but a lower high to be put in versus today. As we enter that resistance gap zone, that would be my entry versus the high of yesterday as my stop. So all of these setups, really, really tight risk. We don't want to be messing around. SMMT malfunction bar to start like the concern on April 25th. Gap down on the 30th. After that, we had this big shakeout to this support gap that if I zoom out, you can see where the gap started. We rallied up into the 200-day moving average. And what you don't want to see when you rally into a key moving average like that is an unfilled gap down. And that's exactly what we got here. So this looking for an uppercut and fail of the 200-day and that gap zone versus whatever the high of the day is when it does that. VVPR, this is a way more speculative name. Trades only $8 million, averages $8 million a day. So not going to be taking this with any size, but had a really nice short on this on the 29th. Now that we've rallied back in, potentially putting in a lower high here. So looking for wherever we open up in the morning, an initial rally, and then a loss of the volume weighted average price, VWAP, as a potential entry. And then the stop would be whatever the high of tomorrow would be, not today's candle. It's a little too wide there. And finally, wanted to end on this note with CRWV. We are getting very extended at this point. Volume is starting to get enormous. It's not quite the highest volume that we've seen. That was on the 21st, but on a dollar volume basis, we continue to be making new, basically liquidity highs. What I'm looking for on this short is if we gap up again tomorrow, which I think we are. Yeah, we're basically flat after hours, but we're consolidating here. If we get another gap up tomorrow, an initial rally, like the first 15 minutes, half hour, and then a, I would be looking for a lower high in the structure and then a break of VWAP as my entry point versus whatever the high of the day is. This could still have another 2 days of just really ripping people's faces off if they're trying to short too early. So when we get into a parabolic move like this, or any type of like extended move or a move on news, if I'm putting on a new position, I always want to stay on the side of the volume weighted average price. I all the big moves in both directions will happen in the order of price to the volume weighted average price. So basically, it's a way to manage risk. It's a way not to continue to take losses. Um, if you're trying to short a name that you just think is extended, and I've had like a couple shorts in here, but we haven't had that parabolic top that we saw with SMCI and MSTR just yet. Looking for that starting tomorrow. Maybe we get it on Friday. But again, if you're going to try to short this, make sure you have a stop. Make sure you're not arguing with price as it continues to run higher because we haven't seen that overwhelming volume just yet. Today we had a good shakeout intraday, so we don't have an unfilled gap up. That would have been the third unfilled gap up. So I think anytime between like tomorrow, Friday, or next Monday would be the potential top on this, short-term top at least. And we don't want to be, again, don't want to mess around with price. Make sure you have a stop if you're going to be trading this on the short side or the long side. But I think this is going to be one of the A plus opportunities that I want to be prepared for. All right, that's going to be the market recap for Wednesday, June 4th. If you guys enjoyed it, please leave a like, subscribe if you're watching on YouTube, and let me know any stocks that you guys are watching for the rest of the week. Take care.